Market conditions remaining bearish in this bull market. Nasty day yesterday. We saw momentum really aggressive to the downside, and now setting well in the extreme location. Also seeing breadth weaken and trending that overall direction. Sentiment also really getting beat up right here. This is really what that transition from complacency into fear starts to look like. So we're starting to see that happening here in the last couple of days, and we've seen buy-sell ratio also moving down aggressively here now, 0.71. So we've gone from that bullish set up to a bearish aggressively here, just really in the last 2 or 3 days. Everything just getting punished right here. If we take a look at sentiment, though, we are getting extreme to the downside. S&P 500 as low as that can go on that current setting. We're also seeing NASDAQ, which is also in that location, deeply oversold now, and volatility to the upside here as well. So pretty extreme. We also saw a real sharp spike in bonds and treasury notes, shorter term yields as well. Let's take a look at those. On the market ETFs, you've got the leader as the VIXI, which is the pro share, the ETF for the VIX, and that really having a nasty spike to the upside, 43% on that. So VIX is really that fear gauge moving higher. We also have seen bonds moving higher. And again, that's that double-edged sword the Fed's been working on fighting, is inflation versus interest rates and recession. So now the talk of recession, Fed's going to have to lower rates, not necessarily because of inflation, but because of recession. So that's the dance right here. It's what's spooking the market, and we're seeing bonds really moving higher in anticipation now of lower interest rates for inflation. That'll obviously help recession, or it'll obviously help inflation, but it could also create recession, and that's kind of that dance. The Fed almost needs that, and looks like the market is realizing that as well. S&P 500 just got obliterated yesterday, all the way back down to that 513 range. You're seeing it all the way back down here. Let me turn that volume off for just a second. But we are deeply oversold now. Momentum at negative 300. So I wouldn't be surprised to see a bit of a bounce back rally right here, but we could certainly slide a little bit deeper. That 1 year time frame, we're now into that corrective zone, or entering at that 505 range, not too far from where we're at currently, and could certainly see that as a testing location. But we're back to this chunk of price activity that we had back in the spring, and at a 382 here at the 505 range. Keep an eye on those levels right here. It's certainly not a time to be aggressively adding in, but there may be some shorter-term tradable opportunities right here. We've also seen, we saw the Russell 2000. We've been talking about that, how strong that one was, but look how weak it got really, really fast. This is what market tops start to feel like. Everything gets chucked out, everything gets tossed, and we start to see really aggressive rotation across the board, and in other areas as well, like VIX, like bonds, and things that were working no longer work, and you just get a mad dash for the doors. That's certainly what we're seeing right here, and we definitely don't want to be aggressively a part of that. We should have been in the bulk of cash, which we had been, 20% in equities, about 80% in cash really for the last few months, and this is part of that reason why. If we take a look at, let's look at Dow real quickly here. Dow also, that 1 year time frame, it's not quite as, even that 2 year time frame, you can see we're just back to some major support ranges. So we could certainly see some pausing right here if there's no additional news that spooks the market at these levels right here. Time to maybe start to look for utilization of some of that cash. If we jump over to sectors, though, we certainly saw sectors having really aggressive weakness. We're seeing utilities, consumer goods still in that buy zone, even though they're getting a bit of a pullback. We did see utilities having a retracement back, but probably of all the sectors, the most attractive sitting here at these levels. Commodities, gold also really not participating much yesterday, but still in that momentum zone, sitting in this upper range. And let's see what we had happen with silver yesterday. Really not much help there either on the commodity side. If we look at USO, also getting really beat up. So we're seeing commodities also sliding. And again, that's the whole point of what's happening right here, is just a massive slowdown that lowers the prices of everything. And sometimes that kills an economy. And so that's markets are going to wonder here what's happening. We just, that's going to be a part of what we're dealing with going forward. We have almost nothing to look at. When that happens here, we can take a look at some of these that have had pretty nice gaps moving higher. That was a medical drug, probably on some kind of an approval of some kind. Big volume coming into that name. And Sonic Automotive, also some strength, gapping lower and moving higher. Let's look at that 1 year time frame. A pretty choppy chart there as well. One way to look for additional stocks in these retracements that don't have new buy signals is just going into your muscle scans, your muscle stocks, and looking at some of those, as they sometimes provide opportunities for a pullback, and they're already in that buy zone but haven't gone from hold back to buy, and you can scan through and just look for some of those. APLT also looking pretty interesting, pretty deep in that retracement, but some of these names really held up yesterday as well. That'll do it for today's update. Everyone stay safe out there and have a fantastic day today.